There's no better way to end the week than missing the breakout of the one stock that we were watching the entire week. Stay tuned while I break down how I missed out on a profit of $5,400. For those of you who didn't watch my last video, I've been trading ticker symbol JD this entire week, and I actually got stop loss out of my last two trades, which were purchasing 800 shares of JD and purchasing for 40 contracts of call options. And I actually, like I said, got stopped out and had a total loss of $1,600. And just my luck, it actually, just as I predicted, it gapped up, and it was a runner today, definitely. It ran up, let's see, a total of roughly 7%, close to 7%. And so, because I purchased my options a little early, because my option had an expiration date in the next month, it was extremely volatile, and it was essentially 10 times 10 times as reactive as its share price. So let's say that JD went up 1%. That means that in terms of the option call, it would have gone up 10% in value. And so when I purchased it, which was on Wednesday, I purchased it here. So one mistake that I can already tell that I made was that my excitement for this trade, because I was so confident in this trade, my excitement for it led me to purchase my shares and my contracts right here, right before it even broke above the previous high. And so just my luck, it made a lower high and started to sell off, and this is when I started to get worried. So it sold off the next day. It broke below this resistance that it had here. So the reason that I sold my shares and my contracts was because in my mind, what I thought was going to happen was, because it was selling off, I thought it was going to reach this low again that it previously had here. So I thought it was going to come back down here, retest these lows, and then gap up. So that's why I sold my shares, because like I said, my call options were 10 times as reactive to the typical shares. So if it fell from here to here, I would have had to put up with 23% extra risk, or 23% extra losses on my position, which I didn't want to do. I wanted to capitalize on that and buy at the dip, or so I thought there was going to be a dip. So the next day, which was today, opened pre-market hours with some good volume here, and right at the market open, had a very small pullback. Let's look at the 1 day, 1 minute. Right at the market open, had a tiny pullback here, 3 wicks, and then bam, jumped up, finds higher support, breaks above this resistance here, higher support again using the blue EMAs as support, and then just keeps jumping up with high volume. Let's see, look at the 10 day, 10 minute. As you can see, during the first 2 hours, a lot of volume right at the open, a little bit of a pullback here, and then higher levels of volume, and then just like most tickers, volume usually dies down around 10 a.m. As we can see here, 8 a.m., which is 11 a.m. New York time, starts to sell off, find some support here, and then just start to consolidate. So the catalyst for this move was actually, I'm sure as a lot of you know, there's a lot of conflict between China and the US right now, and so progression in the trade talks is what caused this to surge up today, seeing as JD is a Chinese company. I was expecting it, and it just sucks so much that I knew that the potential was there, and unfortunately I just wasn't able to put up with the mental fatigue of being down on my position. Because when I took my position, I was, as you can see in my Excel sheet, I was down $1,600, $280 on my shares, $1,320 on my contracts. on my call. And so I didn't want to have to put up with those extra losses, because trading is literally all mentality. It's 90% mentality and emotion and 10% strategy. And so when I was down $1,600, it was honestly fear. Fear kicked in, and I just sold my shares, sold my contracts, and I wanted to get in at a better price point, because previously I got in at a point where it was essentially the high of day. And that fear caused me to get rid of my shares. And then I didn't jump in this sooner. Once it broke above this resistance, I actually re-entered this trade, and having jumped in right above this resistance would have put me at a great entry, but I didn't. I actually ended up getting in around $23.40. And so that was all due to fear. And like I said, it's 90% emotion and mentality, 10% strategy, and that fear is what held me back. But the strategy was definitely there. I saw the potential. I just missed the breakout. And so I'm hoping that this coming week we see some more nice volume in the morning on Tuesday, because I do believe the markets are closed on Monday. And yeah, I hope we see some volume right off the gate, and I can get rid of my shares, probably at the previous high or at this level of resistance that I see here. So that is my summary or my recap of this trade. It's definitely really disappointing. The risk to reward ratio was definitely there. Sure, I lost $1,600, but my potential was roughly $5,400 in gains. So yeah, I'm hoping that, identifying these stocks is definitely one of the biggest things that matters. Now that the only thing that I have to practice is my execution. So I'm hoping that the more time that I spend in the market, now that I'm back in it this year, the better I get with my execution, especially with options, since I'm just starting. And so I'll keep you guys posted on that, and I hope you guys enjoy your 3-day weekend.